how we doing? Welcome to the trading, guys. I'm Ryan Mack. This is my weekly review. So every Saturday or Sunday, depending on how busy I am, I smash out a full fundamental weekly review and I post it in here for our group right around, where are we? Fundamentals. There it is right there. Weekly fundamentals I post in every week, and I also post in swing trade setups. Where are you? There we go. I also post up any trades that we are looking to take that following week, right? Yeah, that's pretty much it. What I'll do is I'll do it on Forex Factory today. Last week, I used it on Trading Economics. I do use Trading Economics for all my data, right? However, to do the weekly reviews, Trading Economics is a bit of a pain in the ass. This is much more visual friendly, although you only get a quarter of the information here as to what you do in Trading Economics, right? Trading Economics is far better than Forex Factory. But for doing the weekly reviews, I definitely say Forex Factory is much more fluid. Maybe if I get quicker at using Trading Economics for this purpose, maybe it'll get a little faster. But for now, I'm going to go back to using this. So first of all, as we do every single week, get out your notepad, open it up to a blankish page. Let me grab a pen. What colour is that? Okay, it's fine. No, where is it? Ain't bloody working. There we go. I'll whip out my Trade Guys pen. So what we're going to be doing here is, on your notepad, you're going to be writing strong, weak, and then neutral, okay? As I say every week, not strong, neutral, weak, strong, weak, and then neutral, okay? The purpose for that is once we look through the different countries' economies and the strengths, we've got to put them, the strong ones here, the weak ones here, and ones that are kind of neutral and a little bit mixed data here. At the end of that, what you do is, once you've got the solid fundamental data, you cross out any that are in neutral and you match up any economies, currencies, which are strong to weak ones, and you trade strong to weak, and then you get the big moves. If you trade a strong to strong, weak to weak, weak to neutral, strong to neutral, you're just going to get mostly ranges, and it's pretty shit. All right, that's how we do it. So let's get cracking, guys. Let's get this smashed out. So as you know, I do one pair each, apart from AUD, China, and NZD. Okay, that's because they're all very closely correlated. I won't get into why they're correlated because I pretty much cover it in every bloody video. But if you want to jump back to previous videos, you'll understand why they're correlated. Okay. So let's have a look what we've got here. We start off on this week and then we jump forward to next week, right? So AUD. Let's have a look. Visitor arrivals down slightly. Wage price index down very slightly, quarter on quarter. China, I want to see that. Money supply year on year is up. New loans, 260 billion. It's up. Excuse me. So, again, don't be fooled by that being red, right? Forex Factory tries to trick you by making that red, and you go see it red and go, oh, that's bad. No, it's not bad. It's just that it came in. Oh, sorry, I am mistaken. I'm corrected. It is bad. It's massively dropped. I had interpreted that as 213 billion and 260 billion, and I saw it as that's an increase. Sorry, it's not. I was mistaken there. On this occasion, Forex Factory is correct. That is a huge drop, so it's not good. NZD officials cash rate, they cut rates by 25 base points. That's New Zealand. New Zealand is weak anyway. What else have we got here? Let's have a quick swatch. FPI month on month, slightly up, but it's down, but it's month on month. Inflation expectations are up. Employment change is up, so employment is up. Unemployment rate has also creeped up slightly. New homes in China down. Industrial production down. Pardon me. Retail sales year on year is slightly up. Fixed asset investment down. So China's having a real hard time, but just now it's just it hasn't really recovered ever since COVID, because they had this kind of, they got over the initial COVID quickly, opened everything back up, and then they had to close everything again, right? So they kind of got a double whammy, and they basically fucked it up, and they haven't been able to recover properly since then. Unemployment rate in China is up slightly. It's not good. PPI NZD is up slightly. PPI output quarter on quarter is up slightly. Okay, so that's decent. There's still mixed news for NZD. So for me, NZD is still weak. And AUD, for me so far, is still strong, right? You can see they're having a couple of little struggles here and there, but it still isn't enough to make it weak, right? In my opinion, it's still up there in terms of being strong. Next week, what have we got for these three pairs? Trade balance, anything important? Flash manufacturing PMI, we want to see that. Flash services PMI, we want to see that. Definitely. NZD, retail sales quarter on quarter, yep. Core retail sales, yep. That's pretty much it. Not a whole lot of news next week for AUD and NZD. So AUD strong, NZD weak, as always. Let me just update this now. So now we're going to turn these off. And we're going to start to do one pair at a time, right? So we're now going to do Canadian dollar. We all know Canada economy is absolutely dog shit. Building permits down. Wholesale sales up slightly, but it's still minus, so it's pretty shit. Housing starts, that's increased. Foreign securities purchases, massively down. Manufacturing sales month on month is massively down. Again, don't be fooled that it's in green. Don't think, oh, that's green, so that must mean it's good. No, it's not good. It's only green because they forecasted it to be minus 2.3, and it simply came in better than forecasted, okay? So that's why it looks at green, but it's actually pretty shit. Next week. So we've got big news next week for Canadian dollar. We've got CPI next week, and they're all year on years, couple of month on months, etc. So, yep, core retail sales. So for me, Canadian dollar is still weak. I just think it's absolutely shit. Well, I don't think. The data tells you, right? Their economy is absolutely shit, so it is weak. Can it pull up and stuff? Yes, because it's highly correlated to oil, right? And right now, what are we doing? We're preempting oil buys, right? So if oil flies up, the Canadian dollar will look as if it has strength, but it doesn't have strength actually based on the economy. Their economy is dog shit. But because it's so closely pegged to oil, when oil gains strength, it basically drags the Canadian dollar out with it, okay? So it's weak, and next week is a big news week for Canadian dollar. Moving on. Swiss franc. I mean, nothing ever happens here, but we always have to check it, right? PPI, shit. Let's see next week. Yeah, nothing that we really care about, so we can just ignore that. For me, CHF is kind of neutral. I mean, some people have got it as strong, and that's fine because we all have different opinions on things, right? That's no one ever has the same opinion on trading because we all look for different things. But for what I look for and looking at this, I would, in my opinion, Swiss franc is just neutral. It's not really doing much. The previous week was a fantastic week for the euro. Let's see what we got this week. French final CPI month on month is up. Flash employment change quarter on quarter is down slightly. Flash GDP quarter on quarter, same. Industrial production month on month. It's actually up. It was at minus 0.9. Now it's at minus 0.1. So it's actually increased, right? It's simply showing red because they forecasted it to come in at plus 0.4. So that's why it's showing red. But if you look previous, it's actually increasing, which is good, right? Okay, nothing much there. Let's see what we've got next week. German PPI, core CPI year on year, that'll be a big one. Yep, CPI all next week. Flash manufacturing, yep, we want to see that. Flash manufacturing services, yep. Flash manufacturing. German flash manufacturing, German flash services, yep, we want to see all of those. Yeah, so next week we've got CPI for Euro. For me, at present, Euro is actually still in a strong because it's the The previous week was absolutely phenomenal for the euro, and they were all year on years, right? So it's not just going to change rapidly. That's all year on year. This has done euro, GBP. We're flying through this one this week. It's much faster on Forex Factory. Of course, during the week, I will look for more in-depth data on trading economics as the news rolls out, right? GBP flash manufacturing PMI. Oh, sorry, that was next week. We want to see this week first. My apologies. Okay, let's see what we've got. Claimant count change is massively increased. Average earnings index has dropped. It's quite a big drop. Unemployment rate has dropped, which is weird. It's a little bit mixed data, right? CPI year on year, it's increased. So don't be fooled because it's red. It's only red because it didn't quite hit 2.3, so it came in less than forecasted, but it's up from before, so it's actually increasing, which is fantastic. Core CPI year on year is down slightly. PPI input month on month is up. PPI output month on month is up. RPI year on year is up. HPI is same, but higher than forecasted. GDP month on month is down slightly. Prelim GDP quarter on quarter is down slightly. Construction output is down slightly. It's actually down quite a fair bit. The reason why it's green and not red is because they said it was going to be -3 and it wasn't. It came in above. That's why it's green. But if you look at previous, it took a big jump down. Good trade balance, index services, industrial, retail sales. So it's took a bit of a pound in that week, but overall pound is still strong. That's not enough to actually move it. The Bank of England have done a fantastic job at cutting rates steadily, right? They've done a really good job at being able to cut rates and not have too much effect on the actual economy. That's their main job, and it's a very difficult thing to do, and they're actually doing it very well. Next week we've got PMI for pound. So let's see what's coming up, right? Normally it's high. Anything above 50 is bullish, remember. Anything below 50 is bearish. So even if this, previously it was 52.1, if we look here and it comes in at 51.3, yes, it's a drop, but it's still bullish, right? Remember, it is bullish. It just means that things are slowing down if that happens, okay? So don't get trapped by that. For me, pound is still strong. Nothing has really came in to knock it off its feet yet. Been very, very resilient. Japanese yen. Let's look at last week. PPI year on year has increased. Remember, they're doing a lot of manipulation, okay? So you have to bear that in mind. Prelim tool orders is down. Prelim GDP price index is down. Again, don't be fooled that that's green. It's green because they anticipated it, they forecasted it, to be 2.6, and it's coming at 3, so it's coming in higher than forecasted, but it's lower than the previous year, so that's not good, okay? Don't be fooled by that fucking colour green. Prelim GDP quarter on quarter is up. Revised industrial production is dog shit. Remember, Japan is a massive production manufacturing country, right? That's where their bread and butter comes from. When those production and manufacturing is really low, machine orders and so on, then that's not good at all, because it's like, well, where the fuck am I going to make money from, That's their bread and butter. I know there's other things, tourism, Japanese whiskey, blah, 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 but it's not their bread and butter, right? Japanese yen, core machinery orders month on month, we need to see that. Flash manufacturing PMI, we want to see that. Again, look, 49.1 previously. Now, if this goes up from 49.1 to, for example, 49.7, and it's increased, that's still not bullish. It's bearish until it passes 50, right? Once it gets to 50 and above, then it becomes bullish. But for now, below 50 remains bearish, all right? National core CPI. We want to see these. So again, for me, Japanese yen is weak. Last but no means least, USD. See what we've got. We've always got tons of news here. Federal budget balance. Small business index is up. Core PPI is down slightly. PPI monthly is down. Month on month is all right. Core CPI month on month is up. CPI month on month is up. CPI year on year is down slightly by a point. Okay, so that's worth noting. Crude oil inventories has increased. Now, let's talk about oil because we're in oil, right? And previous it was minus 3.7. So what they've done is they've decreased production for now. So what you'll find happens is, right, everybody in the world done exactly what we done last week and entered oil like fucking hell. Iran's about to kick off, right? Which they can still kick off at any time, guys. They may not, for the sake of human life, let's hope they don't. For the sake of making money on oil, let's hope they do, right? It's one of these things. Now, the reason why this has changed so much is what happens is when you and I are preempting oil to fly if Iran kicks off, right? The big players in the world are saying, fuck, if Iran kicks off, oil production's going to drop like fuck. So what do we need to do while they still haven't kicked off? We need to produce fuck tons more oil. We need to open more rigs quickly. We need to get more rigs pumping, get it all fucking flowing, and start pumping up as many barrels as we possibly can and put them into a stockpile. And then you get this effect. So right now, because they've got all this stockpile they've hastily bumped up, but the demand for oil hasn't increased yet, especially now because the war hasn't kicked off yet. It's like, oh shit, now we've got too much oil, so then it decreases the price. And that will reflect on where are we? Give me a second, guys. There we go. And that will reflect on here, just as it pulls back. Perfectly normal. I've already marked these up long ago, marked these areas up. If we look on the weekly, all it's doing is just giving you a normal pullback, boom, and away you go. All right. So what happens is, if this should pull back, right, and stop you out at break even, and you're saying to yourself, "Oh bloody hell, should I closed out up here when I was at 10 grand? If it stops me out down here, I'm only going to make 5 grand, or I'm only going to, whatever it is, I'm going to get stopped out at break even." Don't ever think that way, because what happens is markets always move up and move down, right? Look at this, for example. If you got in here, you closed out here, let's say you've made 10 grand there, right? And this pulls back and you've shit your pants going, oh no, close. And then it goes and you didn't get back in. That's a fucking 40 grand trade right there. You know what I'm saying? It's a 40 fucking grand trade. And you closed out at 10. So what I'm trying to explain is, if you create that mindset of shitting your pants every time the market comes back, then what may happen is, yes, this may come back here and you've just turned a 10 grand trade into a 1 grand trade, a 2 grand trade, or a break even trade, right? You haven't made a lot of money when you could have, but you also haven't lost a lot of money, right? Because you've managed your risk. You're just going to, all you're going to do at that point is re-enter here. You don't care if that happens, right? Because we don't trade based on one trade, right? You think of trading as, how am I doing over this next 6 months, this next 12 months? That's how you base it. You don't base it on a day-by-day basis. You know what I'm saying? And the thing is, if you get into the habit of closing trades, you're like, oh my God, that's amazing. I mean, look, if you want to close 80%, 50%, leave a runner, that's totally fine, right? At least you've still got skin in the game. But for me, when you start closing out the full trades, and this then comes back down, blah, 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 to, retest and go, what will happen is you'll end up, when this candle here closes, you'll end up saying, oh, I'm just going to close here. I'll close at 6 grand. This candle here will come down, it'll retest here, and it'll just fly. And then you'll say to yourself, fuck's sake, I knew I shouldn't have closed that. If I never closed that, it'd have been up 40 grand right now. Fucking hell, blah, 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 And that's what happens, guys. So you just need to build that mental resilience, right? And like I said, if you want to close partials when it's up really high, that's fine. Don't just close partials after one candle or whatever, though. That's like 1, 2, 3, 4, 5 days there. There's 6. I ain't closing. I'm just letting it run. If that comes back and stops me out, in mild profit compared to what I could have had, I'm honestly not bothered, guys, because all I'm going to do at that point is wait for it to come back, retest, re-enter, and fuck off, right? And then we'll make the money back, okay? So that's all we're going to do there. Now coming back to USD. Core retail sales month on month, slightly down but better than expected. Retail sales month on month is up. Unemployment claims are down. Empire State Manufacturing Index is up. Philly Fed Manufacturing Index is down. Import prices month on month is up. Let's see, industrial production down. We don't really mind because it's not really a manufacturing country. Mortgage delinquencies is up. Building permits are slightly down. Housing stats slightly down. UOM consumer sentiment is up. Inflation expectations is the same. So for me, USD is still strong, guys, but we can see the data isn't as strong as what it usually is, right? I mean, this is just like a one time, so we don't have to really worry about it too much, but you can see there's some kind of weakening, and that's because people are anticipating a recession. They're like, oh, this can't go on forever, the US is going to crash. And with all that bullshit you saw in the stocks, that actually had nothing to do with the US economy. People are like, there's going to be a US recession, all the markets are crashing. It had absolutely fucking nothing to do with that whatsoever. It was to do with Japan. So Japan were in negative interest rates, right? So that meant if you borrowed the Japanese yen in huge amounts, you didn't have to pay interest back on that because it was at like minus. There was no interest to pay back. So what people were doing was, big institutions, they were borrowing fucking monstrous amounts of Japanese yen because they're like, we don't need to pay interest back on this. We need to pay the money back, but we don't need to pay fucking interest back. This is phenomenal. So they were borrowing fuckloads of Japanese yen. They were putting it all into the American stock market, and they were getting 5% yield. Happy fucking days. It's money for nothing, right? They were literally getting free fucking money for the last couple of years now. And because Japan increased their base rates to plus 2.5, 0.25, sorry, that meant that there was now a huge amount of interest to be paid on all this Japanese yen money that they got for free. So everyone was like, fuck, hurry up and sell this before we have to pay all of our profits back to Japan because they've now implemented an interest rate. So if we don't get the fuck out of this, all this 5% yield or whatever we've made, lumping the money into all these various different markets and different currencies that were yielding better, if we don't give it back, we would have done all that work and we're going to have to pay it back to the fucking Japanese government. So everyone shit the bed and started cashing in all their fucking shares so they could quickly pay back the loans, and that's what happened, right? Or the loan of that money, and that's what happened. But people don't really understand the full side of it. Will just be like, no, the US economy is going to crash. US is too high. It's all fucking bullshit. The data doesn't lie. The data is fucking fantastic for the USA right now. I mean, it's going to change at some point, right? Of course it will, but it's not going to change right fucking now. But we are starting to see stuff slow down, right? So that's important as well to remember. Next week, we've got crude oil inventories again, which we want to see. FOMC minutes meeting, unemployment claims, flash manufacturing PMI, we want to see that. Flash services PMI, we want to see that. Exiting home sales, Fed Powell speaks. And that is pretty much it, guys. Okay, so we've got some decent news next week. It's not, wait, I'll just come back so you can see me. Where the hell are you? There we go. It's not the type of news that's going to stop me from entering this week. For example, last week I said to you, right, I was like, I ain't touching fuck all this week, lads, because there was just so much, right? This week isn't the same. There's some good news coming up that we need to have a look at, but it's not. There's not so much of it that's making me think, fuck that, I'm just going to see you next week. So I will be looking for opportunities next week. After this video, I will mark up my charts. What are we on here? 23 minutes. Yeah, fuck it, let's do it now, because that's quite a quick video. I've liked how quick I've done that. So let's just start from the very top and work our way down, right? I'm not going to bother with anything here. AUD CAD. Well, I mean, look, you don't even have to fucking do it anymore, guys. It's literally as simple as that, right? You're looking for it to come back and retest that zone. Fucking hell. Would I take it? Nah, it's not a trade that I would take. I just think it's pretty shit. Could you take it if you wanted to? Yes, you absolutely could, guys. Of course you could. I just don't like it. Two pretty shit pairs, in my opinion. AUD-CHF, look, beautifully back to our area, and away it goes. Not a good trade. I marked this up. I told you, I ain't fucking taking it just because you can. I'm lit for in this kind of pair. All I'm waiting for is this to either hit this region and melt or come up here and melt. I ain't interested in taking this. It's a hedge trade, and especially now because I'm trading other people's money, I ain't fucking touching hedge trades. And because the probability, look, you can see here, you would have made a fucking fortune if you just marked up your chart, entered here, and away you go. You'd have made a fortune. But you also may not have made a fortune because it's a higher probability of just, fucking melting, right? Especially against that. Again, look, you can see how powerful these zones are, guys. They're absolutely fucking brilliant. Time after time they hit. I wouldn't trade this anyway because it's ranging. You know me, I don't trade ranges. I only trade like this. I only trade trends, right? I don't bother with ranges. Just a massive liquidity grab there. That's all that is. Again, you could enter that. Euro AUD, let me think. Euro strong. Both are strong, so I wouldn't touch them. Because then that's why you're getting that range there, because both of them are strong. EuroCAD, wouldn't touch it until it breaks above. It clearly breaks above, goes back through testing goes. I wouldn't touch it. Euro CHF, again, look, lads, look, fucking bang on, right? Of course, sometimes it can just hit the tip. Sometimes it can come in the middle. Sometimes it can give you this liquidity grab. The reason why it does this is because where does everyone put their fucking stop losses? I'll just put my stop loss behind the previous low. Right? That's what everyone fucking does. That's why it does that. Bang, stop, shout, fucks off. That's why you hear Dr. David Paul. He's passed away now, but he's an ex-Royal Marine officer, fantastic, fucking well-renowned trader. He always says, when you're about to enter a trade, just think to yourself, hold on a minute here. Where am I going to put my stop loss? And you're like, right, I'm going to put my stop loss here. Okay, well, you know what? If I'm going to put my stop loss here, I'm just going to fucking wait on this trade. I'm going to, instead of putting my stop loss here, what I'm going to do is, instead of entering this trade right here and put my stop loss here, I'm going to put my entry here because I know every other fucker's got the stop loss here, and I'll put my stop loss down here. Comes back, enters you in the trade, and away he goes. That's exactly what he does, and it's actually a very good method. Euro USD, again, need to see what happens here. It's just a big, massive range, right? It's totally horrible. I don't really like trading that pair because Euro and USD are always neck and neck. Same with Pound USD, Pound Euro. Don't really like trading them. Can you trade this from here and take it down to here or take it down to here? Yes, you absolutely can, guys. There's really nothing wrong with it, apart from it's just not my system. I just don't fucking like it. And both pairs are strong, so why the fuck would I trade it? Again, look. You guys have been watching my lives for long enough now. I mean, how many times does it come to these zones and hits it? You can honestly say it's very seldom that it'll come to a trade and just keep going, or not come to it. Maybe just come to here and then fly, and you're like, holy fuck, that will happen. But I mean, look, how many times do these trades just keep coming in, keep coming in? Again, pretty shit. Euro NZD. Euro is strong. NZD is dog shit. So I'd be looking for buys. I wouldn't be taking this down. GBP AUD. Again, look, there's another one we fucking marked up. Bang in there, and away it goes. But again, look, it's just a range. I wouldn't be touching it again because both of them are strong, right? Pound and Aussie are both strong. Let's see what we've got here. Pound Canada, so pound is strong, Canada's dog shit. So yeah, I'd be looking for buys, guys. I wouldn't be, but you would not be fucking buying up here. You know what I'm saying? Not a fucking chance. There's no value here. The value to buy is down here. So you're either doing two things. You're either entering a sell or you're doing nothing. So I'm doing absolutely fucking nothing, right? And if I was going to do a buy, it would from this type of area, it would only be once it broke up here, then came back for retest and went. So you're miles away from a situation where I'm buying pound CAD. So you know that that's off your list, right? Again, lads, look, fuck my life. Excuse me. GBP CHF. Yeah, I wouldn't be touching it. I would only be selling it once it gets to here. Can you take a trade? Yes, you can. Of course you can. But I just fucking don't want to. It's not part of my rules. It would be breaking my rules and what I look for. GJ, again, look, fucking fantastic in there. Still not really what I'm looking for. I'd wait for the retest. The reason why we didn't touch this, right, is because even the Bank of Japan were posting, they were like, fuck, we don't even know what to do now. Actually, like from the results, we don't know what our next fucking step forward is. But the Bank of Japan doesn't know. How the fuck are you and I going to know sitting in our living room? You know what I'm saying? So that's why we're not taking this. Just wait. If it retests here, I'd be happy to take it, but I will let you know when that comes. I'll give the signal if I end up buying it. But I will be cautious. I'm not going to be jumping into that one. GBP NZD, we were in this. Like I said, we made plenty of money on this, right? It's not a good trade in terms of we were going as a counter trend trade going against the fucking foundational economics of the countries. Pound is strong, NZD is dog shit. So we're really looking for buys, right? However, could you trade this at the, what do you call it? As a hedge? Yes, you could look because it's a prime area on the weekly. There's nothing wrong with taking that. The real trade though is if it breaks above here, retest, that's your entry. Or if it comes down, these levels here, retest and then away it goes, or retest here, would actually be even better still. Retest and away it goes, right? That's really what you're looking for. Pound USD, I already know I ain't touching it, so that's out the question. Both of them are strong. NZD USD would be sells, but it's not enough. You can't sell from down here. Look, it's like a fucking. It's down at the kind of all-time lows, right? You ain't gonna fucking sell from here. For me to sell it, really, guys. I mean, it's a fucking long shot, right? There's two areas. Come back up and retest here, really, or the next one would be goes back up retest here. That's really it. Obviously, that can be quite a long time. Yes, you can catch these little moves here. You can, but it's just I'm not interested. I'm not interested in shitty little moves. My mate who trades, he trades like $104 million account. He's took 2 trades this month. 2 trades, and one of them was the same oil trade as us. I saw him post it. We were already in it 2 days, and I saw him post it. We actually got in at a much better price than him, actually. NZD cat, yeah, dog shit. NZD CHF could all-time low, but I just wouldn't fucking do it. Why? Because look, I mean, there's pretty much never been a time in history where NZD has beat the CHF. So you're really just waiting for it to come up here and then fucking melt again. That's it. But you're a long time waiting. If you want to take that, risk it and ride it around till it comes up here, you can do that. I just wouldn't do it. You don't need to. You know what I mean? USD CAD, USD strong CAD shit. So yeah, it's really buys, guys. Obviously, you can see, look, you can clearly sell from here, right? It's a hedge again. I just wouldn't do it. Not interested. But it's just going to range, in amongst here like it's been doing. And that's why I don't trade it, because it just ranges. It's dog shit. USD Japanese yen again. Look, both bang in the zone. Can you see? I'm going to zoom in to where you mark these up. Look, just so you really get used to it, right? Just spot these small candles with the large candle in an area of value, i.e. the 618 or the 786 Fibonacci, right? That's fucking it in terms of the technical analysis side of it. Where do I enter? You fucking draw this box up, you wait for that fucker to come back here and hit, and you enter the trade. That's it. It's fucking fantastic, lads. Obviously, the reason why we haven't entered that is because, this all happened when the markets were like, what the hell are we doing? We've no idea. So you need to be cautious. And you haven't missed the trade. We can always get back in later, right? USD CHF, you could easily hedge that. Again, I wouldn't. So there's really nothing here that I'm really up for trading right now, guys. That's just the way it is sometimes, especially August. August is a dog shit month for trading, the same way as December is a dog shit month for trading, because it's fucking summer holidays. Some people's kids are going back to school. Some people are taking them away because it's cheaper fucking holidays and all this. All this stuff happens. It's perfectly normal. Happens every year. So what we are now, oil. I'm just waiting for oil. So let's discuss oil because we're in it, right? You look, could oil come back down and retest this green zone? Absolutely fucking could. My stop loss is already at profit, so even if it stops me out on all four thingies, I've still made profit, not as big as what it could have been, but I honestly don't care, right? Because we're not basing it on one trade. It could come back down here, retest this, boom, and away it goes. And remember, this is down here at 70, 72, blah, blah, blah. And there's no real crisis in the world right now to support bringing oil down to those levels, because oil companies, sorry, they stop making money once oil, pardon me, gets below $75, right? So there's no fucking reason on this planet for oil to come down here and just keep passing down to this area. There's no catastrophic event right now that's made that happen. Could it come back down here? Aye, because it's great value. So all we'd be doing there is just fucking lumping in. If it stops us out profit, who cares? You're just looking for our next entry to lump in, right? And if it does break down, we're like, all right, all you're doing at that point is sitting on your hands and waiting for it to give you a reaction at one of these areas. Then we lump in, and then we let that fucking thing run for 2, 3, 4, 5 weeks, right? That is it. While we hunt for more trades. And look, they all work the same. Let me just show you Bitcoin. Fucking, there's Bitcoin, Ethereum. It all works the same way, lads. It all works the same way, and that is pretty much it. I'll stop the video now, and then I'll ask you guys if you have any questions, right? So if you're watching this from any other platform, whether it be YouTube, Facebook, whatever, and you want to come along and join us in our Discord for a completely free month, you don't have to pay anything for a month. You can come on, get full access, mentorship, education videos, weekly reviews, midweek reviews, daily reviews, trade reviews, and so on and so forth. Signals where we tell you what we're buying, what we're selling, so you can make money while you're learning. Then come jump across at www.thetradingguys.com. Depending on which social media platform you're watching it, I may have put the link above or the link below in the description if it's on YouTube. Okay, so have a look and come and join us for a free month. See you later.